The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon, 877-927-6648. Number to call. Great programming earlier this morning, and hopefully we'll keep that standard up. Don't forget, we've got shows all the way through today being Thursday. You can go right through until you've got Andy Hecht finalizing the repertoire of hosts. And so don't forget also that at noon, you've got really a fabulous show on options. This is the kind of insights you get. It isn't just options. It's the way the Think or Swim hosts really talk about not just the trades. I love the inflection, like when Kevin talks about the macroeconomic scenario. So this is really something that is offered to you as a continuation of the education that we all try to give. Then, of course, you've got Steve Rose, who's the synthesizer of many, many techniques and puts them together in his own inimitable style. You've got David coming up at David White at 2 o'clock Eastern Time. David has a very regulated, beautifully mathematical way of looking at a structured way of looking at the market. Really interesting. Then, of course, Tom O'Brien, the gold guru and the master of many techniques and really fabulous shows. And then Andy Hecht comes in with a different perspective. His perspective is one of historically, he's been there. He's done trades. He's been in those positions, big trades in the commodities market. So he really understands it from the inside out, and that's really great. So, we all love being here because we feel we get educated through the educational process here. So the Dow's up 16 at 22,031. I did my webinar last night. I pretty much covered everything I wanted to cover, and then we still had 15 minutes to spare for questions and answers. And within the context of what I wanted to cover, I think I covered pretty much everything that at this particular phase in what I call the coda. This is the second half of the coda and about half in time, but this is the parameters. In fact, let me just show you something here that just coincides so neatly with what I love to look at in terms of what's out there. You see this? As long as I've been in Boston, since the 1970s, every time either the convention center or the World Trade Center or something, one of these big centers that they have in the Boston area gets talked about, and then there's a plan that they want to implement. It is so close, and they talk about we need another 1,000 or 500 hotel rooms or whatever it is. Look at this picture, new convention center. Look at that. This is an extension to what's there already, and that they're planning, and it just never fails. So get ready for convention center expansion 2.0. For the Boston area. Of course, 2007 was when we saw the last discussion about that. And so it always says to me, start getting ready. This is where we need to be looking at real estate, certainly in the Northeast or the Boston area. And we have to start putting things together in a slightly different way. And if you look at, oops, where did it go? Oops, it's right there. Let me see if I can get that again. It is that one. All right, let me move this higher, and I want to show you the second one, which is this defunct dry dock could be the city's next great park. So with the design that you see right here, they want to turn this wharf, or what was a wharf, into this. And I always think that these projects are ready for like the next generation. I'll talk about that over a period of time. What I call the next generation projects, like the Empire State Building was for the next generation. 1929 was the papers were signed. It was completed in 1931, shortest period of time ever. And it opened in 1953. It opened, and only in 1953, 52 or 53, did it actually start to make money. That's how long it took. So whenever anyone says to you, oh, any 20-year period in history, the market's always up, I say, hey, it depends where you start from. It doesn't always work that way. So these are big projects, and some of them are beautiful, some of them are ugly. That's not for us to decide. History will decide that. And what's really important is the fact that they're coming now. Yesterday I showed, I wonder if I've still got it. I don't think so. I think I took it off. Yesterday I showed something, UMass. That's UMass Boston, University of Massachusetts, has the third highest rated cafeteria. And I said, it's great. I mean, maybe if it was a culinary school or something like that, but the students that are complaining they can't afford it. It's fantastic, but they can't afford it. Why are universities spending so much money on peripheral things and so little on education, really? They pay a lot for their premier faculty. We know someone in the Boston area, perhaps a senator who maybe got over $300,000 to teach one course at a particular university. I mean, tell me if that isn't excessivity in its greatest form. How can you justify that? Whoever it is, it just doesn't work. All right, back to the market. Dow's up 13 at 22,030. Let me just show you something here. I'll go through everything because. For me, it's kind of the start of a fresh thing. Worked really hard to get everything done by tomorrow. We made an all-time high today of 22,040, just above the previous high. Market's getting a little bit tied price-wise, but the technicals are still really good. The MACD is trading very strongly higher. We haven't even started to see a decline in the fast-moving average. It's just starting right now. And the stochastic's flat at 95%. That's really good. On-balance volume suggesting it's getting a little toppy. My thinking here is that we're going to chop around a little longer before we start to pull back. But the gaps, let me just show you the gaps. The gaps in the daily chart, Dow chart, see these? I don't know if you can see that. Yep, you can see it. The yellow rectangles right here. Let me just pull this across. These gaps, at least the first two, will be filled within about a week and a half, I'm sure. And that should take you down to the high that was made on the 28th of 21,841. So that's my thinking. And then we'll see, because once that happens, it starts to impact the weekly chart. Now, there's some hubris. I talk about this a lot. You remember I spoke about all the time it was happening. I kept saying, I don't understand why President Obama does not talk about the stock market. It's had one of the greatest runs historically, and he should take credit for it. There are other things that you could be lambasted for, misspeaking about you could take your plane with you, you could take your doctor with you and all that. But hey, I mean, facts are facts. Whatever he did, even though it wasn't him personally, but it was his choice of the at the time it was Bernanke, and then of course you got Yellen. So I don't know why he never took credit for it. Now we've got and I've said my concern here is that we're going to have a president. I said this even before the stock market started to really rally strongly. I said, I suspect that President Trump is going to take credit for the market. There's the hubris that we're looking at. The market has a way of saying, be careful how you use me, because I have a way of smacking you on the nose when you least expect it. S&P's on 3. We'll be back and talk market as soon as I get back, and transportation index is finally having an update. Hey, that's a change.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, everyone, we're back. So let me go through this. We've got the Dow up 4.97. I suspect that we're starting to see, based on the 120-minute chart, some kind of a consolidation here. I'm just for the moment calling it consolidation because we don't know how the rotation through the different, for instance, Boeing had a spectacular move to the upside. Now it's pulling back from a peak G/C. The MACD is still very strong. Stochastics pulled back to 84%, but still is above 80%. And then weekly chart just has a straight up move. I suspect that, I meant to draw it in, I'll draw it in right now, that the price movement in Boeing has seen at least a high for now, and that we could be pulling back into the middle of that bar, so we can go down to, it's at 237, we can go down to 230. A break of 230 says, okay, you can go down to the low of that candle that spiked up from about the 223 level. High was 246.69. So that could, now we've seen some digestion, and Apple, of course, is now in the Dow, and it's spiked in a peak F. Now it's a peak F. In the daily, I'm always a little nervous when you gap up into an F. I usually say on a Friday. This is on a Wednesday. But in fact, look at it. Gap up, low. It closed near the lows yesterday, spikes to a high, all-time high. Yep, all-time high of 159.75. Boy, I wish it was 160 round number. But we're starting to pull back, and I see a digestive phase right now in the, I see a big digestive phase in the Apple trade. Maybe it can go a little higher, 162, but between 162 and 151, I think that that's going to be the next 2 weeks trading band. Let's see what happens there. Let's go to the S&P, SPX.X. There we are. The S&P hasn't gone above that peak D2484.04 high. It's the 27th. Yep, the 27th of July. MACD is turning down, just crossed negative today, but it hasn't taken out. I would say that I'd put a down arrow if it closes under the low of yesterday of 2466.40s. If it goes under that, then the stochastic will go lower than 78%, probably go down to 73%. And that would say to me, that rectangle low of the 27th at 24.65 had better hold. Otherwise, there's a real problem. And we've got that candle, the doji candle, that I think we won't break to the upside by tomorrow at 4 o'clock. We'll see. It doesn't look like it can, and that's going to be a very big signal. Let's go to the QQQ, the NDX 100. Made a peak C-top. I got a feeling there's going to be a C-top for a while. But in the meantime, what we're looking at 143.60, down 32 cents. My thinking here is that the QQQ series, the NDX 100, is going to be in a consolidation phase. But if it closes underneath at 143.61, if it closes under 142 in the next by Tuesday afternoon or Wednesday morning of next week, it is in for at least a short to more intermediate term decline. And let's go to the IWM, which has been the laggard. It's down 29 cents at 139.94. Just the other day, it was at 144.25 on the 25th. So this is a 5-point move. This is a pretty big pullback. And that weekly chart, I said before, I think it's a leg F with a peak F coming in tomorrow and a leg D in the monthly chart. IWM is really the clue to say the upside is starting to become limited. And could I refresh my charts? I think my charts are good. Anyone in the den just say there's a problem with the chart so far? No, I think it's maybe, Mr. Bull, it might be yours because my charts seem to be working fine right now. Let's go to gold. GC acting quite nicely in terms of coming off a low this morning. The low was at 1262.9. It's got a 1263, and now it's trading at 1274. Yes, it's down 3, but it was down much sharper. I went through this last night. Now, for those of you who might be interested, the webinar series which started last night is archived. And what I tried to do, although my daily call is really updated, and people who started getting my newsletter yesterday are looking pretty good. I mean, I hope they really, participated in those positions because they are doing quite nicely. But what's really important is that within the context of what I'm doing here, I'm taking the full 2 weeks, so that Wednesday night in 2 weeks' time, between the newsletter coming out every day, the webinar last night, which gave a really big picture as well as a micro look, so that we would start positions in areas I haven't been in a long, long time, because I think there's a rotation going on. We're trying to identify the next sectors that perhaps could do well while some of the best are pulling back. So as I'm doing that, I'm looking at gold. I'm saying, gold's held very nicely. It's at peak D. I've got a left side, right side price time match that says by the 8th, there's a chance that the gold could get to 12.89. That's a nice move. Then it sort of gets, then it's above the 200-period moving average in the weekly. So that's what we're looking at. So I'm looking at this, I'm saying some actions going on here that you cannot dismiss. So let's do the dollar. The dollar's trying to make a low here, but it's really tough. And my thinking is that I did quite a bit of work on it, and I discussed it last night in the webinar. But my thinking here is that low of 91.92 from way back May of 2016, I think that, and there's a weekly chart, there's a left side, right side price time match that says we should get really close to between the 93 level, we've already gone under it because we're at 92.73, and 91.92. And then a lot of things can happen, and that could take maybe into next week. But I'm thinking the dollar's going to try for a rally, and we'll see how gold will hold up. Let's look at crude oil. This is very interesting. Crude oil now is trying to go to a leg D in left side, right side price time match and Chapman wave methodology, and that would say that it should try to target the 50.71 level, and that would be by 1 day, 2 days. By tomorrow or Monday. We should have it pop to the upside. That would be a leg D in the daily in crude oil. I'm actually looking at crude oil a little differently now. Now I'm saying, you know what? I think it's trying to form a base. It doesn't have to go very high, but it doesn't have to break down at this point either. So this says that and we got Platinum Mike in the den, who had a spectacular move in platinum. Look at that, up $13 at 966.70. Leg D broke right through resistance levels, and he has PPLT. We discussed that the other day. Big move, 92.08 up $1.56. Congrats. But he also has MRO, which is Marathon Oil. Hey, Mike, you're the one that's doing very nicely here. Those are big moves. So this is a leg F/A. I'm calling it F just for now. And that Marathon is up 96 cents at $13. Marathon Oil Corporation. And yeah, very nice. So let's continue. So I'm looking at crude oil. I'm saying, I think some things are happening that are a little more positive than I thought would be earlier on. Let's also have a look at high-grade copper. High-grade copper trading right now at 2.8835, down just a tad. I did do this Chapman wave stalk leg formation oval pattern, but this oval could very easily turn into an arch formation. I'm giving it the benefit of the doubt because high-grade copper is held beautifully. Could be a renaming. It could be a G/C. Let me put that in because I need to put the alternative. A G/C is a possibility because of the way it hasn't broken below the 9-period moving average. MACD is good. Stochastic is at 86%. Weekly chart is still very strong, and it's in a D in the day in the weekly and a D in the monthly, and the technicals are good. So I'm looking at high-grade copper and saying, you know what? I've got respect for a chart like this. So far, it's holding very well. It could make a D pop to the upside, and then we'll have to reassess. But so far, that's very good. TLT, we need a little time to come to the TLT, which is up 76 cents at 125.47. And we'll look at that chart, my weekly chart of the triple yields. Look at that, arching over in the 30-year, the 10-year, and the 5. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Now, I was talking about the going forward on the day after my show, but I really should have mentioned earlier. You've got John Logan, whenever he's available, just a wealth of information and fabulous program. He's developed a software program, and of course, you've got Larry Pesavento. He's our esteemed elder statesman of the stock market gurus, and it's really, we've got quite a network here. It's something to really be proud of. And now we've got a newcomer to our crew, which is Tommy Jr. And if you listen to him do this 3-minute wrap up, just a quick market overview at 9 o'clock, to think that this is kind of new to him. He's doing a fantastic job. So let's get on with the market. The market says, I had a question about PSX, which is Phillips 66. Yep, that's doing very well. My eye says that the weekly chart is trading at 86.01, down 66 cents right now at a peak D. Could have a little bit of a digestion here because it's really been leading the way up. But it looks to me like if it can break to a new recovery high above 87.30, then all of a sudden the real resistance comes in at 88.87, the high of the week of the 16th of December of 2016. And this cup formation, I could have done left side, right. I'll do it right now. A left side, right side price time match. This is a traditional one. We'll do it as strictly as possible to the plumb line of the low that was made right there. And that low is correct right there. Wait, it's not working. There it goes. Yeah. And now we go left side, right side, click, click, color green because green's on the way up. And it comes in at the week of the 25th of August. It should be hitting that. It could do it earlier, but I'm saying that would be the left side, right side price time match. I also have a Chapman Wave inside wedge target line. And that target line says from there to there. Yeah, so it's just stopped at this target line this week, so it might take a little while longer. And the monthly chart is starting to improve on PSX. Next question I had was UNG. In the den, there's a question about UNG, and it coincides exactly with Greg's question. Good morning. If you have time, could you cover NG, that's natural gas, thinking about going short UNG? Do you think it will make it back to the 9 EMA? Your take? We'll try to call if possible. Thank you, Greg. So, Greg, I'm looking at this and I'm saying, whoa, it's kind of near the lows in the arch formation at 6.31. To go short UNG would imply that you're thinking that it's going to break and it's going to go into the 5s and could go even lower than that. I don't know about that. I'm looking at this and I'm saying this area that goes to, well, 578, I mean, that's a big percentage gain, 50 cents, about 10% almost. I'm just thinking that this has got the same look. If you go to crude oil, and you know what's interesting is sometimes they go in opposition. When one's going up, the other's going down, just like right now. UNG is not, natural gas is not looking as the NG contract. Natural gas is pulling back sharply, making lower lows and lower highs, whereas crude oil, and they are separate. You've got to think of them as separate things, but every once in a while, you'll get an inflection, deflection, where there's a mirror image, where one goes up, one goes down. I'm just thinking that if anything, UNG is going to be dragged up, and I'd be rather looking not at shorting, but just having patience to say, let's see if it pulls back a little bit, and is natural gas going to be a buy? Now, I guess this is ready for Andy Heck to be talking about. I don't want to go into the fundamentals, but I am saying that this is kind of the season where we start to look more towards winter. So the driving season might be done with that crude oil part of it, but natural gas is in. There's a different economic sensitivity with natural gas, even though in the main, crude oil and natural gas have kind of gone in the same direction. So I'm just going to say to you, Greg, I would hold off. And in the den, there's a statement that says it's not acting. UNG seems to be tracking crude lately. Was a problem in the past. Seems not to be tracking crude. So all I can say is I'm inclined to think right now that if anything, natural gas is trying to form a base. It might not form the base, but I don't know if I would take the risk of shorting it right here. And now the moving average is the question. Could it go to the moving average? 6.44. That's the move that says to me, 6.44 in the daily, 6.67 in UNG, United States Natural Gas Fund. That's the one that I would look at and say, a close for the first time in weeks above the 9-period exponential moving average after having made and closed in the arch formation with a lower low, says, yeah, you can bounce, and that bounce might be limited, but boy, a bouncing even into the gap above the high of the 27th of the 2nd of June in the 717 area, that's pretty good. So I'm saying just have patience. I'm not the one right now to say that natural gas, not the work I'm doing right now doesn't suggest that natural gas is a short in terms of risk reward. If anything, it's going to be a buy if it retests the 620 area and holds and then just rallies a little bit stronger. I would say there's a good chance then that it could go to 644. So I hope that answers your question. And okay, next question I had was Sarah wanted to know about FXE. Oh, I haven't looked at FXE in ages. This is going. Oh, I have to find the low. Okay, so that's the low. It goes A, B, C, D, instant restart. A, B, C. I'm thinking it's going to make a D, although it has to look in the MACD and stochastic. This is the currency shares of the Euro Trust. And this in the weekly chart is A, B, C, D, E, F. You know what? If you don't mind, I'm just going to go to what I know very well, and that's the euro-dollar currency pair. And here it is, an F slash slightly different. A 83.72. I knew there was something. 83.72. Aha! You know, sometimes when I've done these so long that sometimes I can look at a chart and say, something's wrong with that letter. I know that's the letter that's written, but I have to go back and check. And then when I do go back and check, I see that there was an error, and there it is. I thank you for that, because if I hadn't looked at the FXE, I would have been in the wrong letter. And the only obligation in the Chapman methodology is to get your right letter, and then you're okay. So now what I'm looking at is a brand new A, at 25.38. So this is A, B, C. I'm correct. That's what I wanted to say. This looks like it's an F slash C, and it could go to, so that's F, E, G. Oh, man, I'm messing this up. E slash A. It should be uppercase. I don't have time to change it. F slash B. And here we go to G slash C, and it's very close either to make a D or failing here. I'm looking at it, and I think that we are very close in terms of G slash C. In the euro-dollar currency pair, I think we're very close to forming some kind of a short-term top. But the way it is, unless it's an Eiffel Tower straight up, straight down, which means that the dollar is just going to scream by Wednesday, Thursday of next week, I don't think it's going to do that. I would suggest to you that I'm putting in a rectangle here with 1.170 as the euro-dollar support, and we could have a high-level consolidation going into next week. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. So I'm going to get to the questions, but what I want to do also just mention is that for my webinar, it is ongoing. So if you're interested, I'm trying to sort through what's working, what's not, how does this rotation work, how there will be a rotation coming up. As far as I can see, there are just so many signs that suggest there's an overbought situation in some of the sectors, and they're going to rest. And as they rest, what's going to work for the next few months? And is this going to be just, if there is a big pullback, is just a 6 or 8% pullback, say in the Dow, maybe 6 or 8 in the Dow, maybe a little bit more in the NASDAQ. If that occurs, what if the Dow suddenly spikes to 22,100? Does that change the whole scenario? Does that imply that there will be a rotational correction? What if there is a sharper pullback over the next week? And out of the blue, your Apples and all the stocks that were holding us up, Boeing suddenly come back quite sharply, give back some of the huge gains and fill the gaps that are there. And what would be the situation? So that, I think, is what I'm covering. I'm trying to cover it. We've got stocks, we've got longs, we've got shorts now. I'm trying to prepare us so that we are ready for almost any situation. I hope it succeeds. I don't know, but that's what we're looking at. So, so the webinar is active. It's a 2-part webinar. Last night was the first. It's archived. You can go. There's no time on this part of it, although because I'll be updating in my newsletter every single day. You'll be getting that, so you won't be missing out. But what really is important is the overview, what we're looking at, those sectors that we looked at in great detail yesterday. How can things unfold? And then, of course, you get the follow-up in 2 weeks, and you'll still be getting the newsletter for a little bit longer. So I'm suggesting that if you're interested in how your portfolio could change a little bit, what should stay the same, what modifications, where you've got to be careful, how we're going to try to use the volatility index, this could be an appropriate time. So a couple of things that I had. The question Julie had is, will this crude oil rally fizzle like it has so far each time? I'm saying I think so, yes, but I think it's got more to go to the upside, more like time to the upside than maybe price. We might get both, I don't know. But I'm looking at it and saying, for now, I think we've made a really good cushion in the 46 to 44 area in crude oil. And that's the way I'm trying to deal with it. And I'm seeing the same kind of rotation possibly happening in gold. The gold stocks are not acting as well as gold, but that's what we'll have to deal with. Other question I had is, so the euro, I just wait on the euro. I think in the next 2 days, we're going to get a really good clue on whether it's going to come down, if that's a short. UA, this is Under Armour, is just looking terrible. I don't know what the question was. That goes to the XRT. Yes, I made a big thing last night, the difference between the RTH and the XRT. That's the RTH is the market vectors retail. So that's acting, it's in peak D. I'm watching this very closely. How does it garner support? Is it 81? Does it hold the 80 level over the next week? That's going to be very important. XRT is not acting nearly as well. Next question I had. Oh, Intel. Really quickly. Yesterday I had a question about it. I was going to get to it, and I forgot. Intel has made a peak D. Now, Intel was coming down when the semiconductors were screaming. The semiconductor index was screaming higher. Now Intel's just playing some catch-up. It got stopped at the weekly resistance level, dash level. I'll spend a little time. Remind me again tomorrow. I'd like to spend a little time on Intel because it could be getting ready for a bigger move, and it might have much less of a pullback. And some of these semiconductors have just screamed. Look at LRCX, the leader on the upside, and Applied Material. Look how they've pulled back so quickly, 170 to 148 in LRCX. So no, the semiconductor index itself, I think, is vulnerable, but Intel might be. And you had said that you think it's a leader. No, Intel hasn't been a leader for a long time. Maybe the new product line will change that. I don't know. We'll see. So we're about to wrap up. Stay tuned. Got great programming coming up once again. Oh, and you've got the S&P. Guess where the S&P is? 3:30. You've got until 3:30 this afternoon. Go to the front page of TFNN. Check it out. This is our fabulous thing on Facebook, and that's going to be really great. So there's only I've got another segment to go. Thank you, Code, in the den. 15 more minutes. I'm going to take it easy now. We've got plenty of time. We'll talk about that, the prizes and what's going on here at TFNN on Facebook. Geez, I might even have to join Facebook one of these days. All right. So what I want you to do is there was a question about the IWM. And the IWM, I just wanted to put into perspective, the IWM was holding well as the Dow was going to new highs, and some of the other indices were kind of struggling. And then from the high of the 25th or 27th, from the 25th, when it made that 144.25 high, it's just been red candles all the way down. And that's in a different sector. You see the Russell 2000, that's going to different areas of the market. And because it's going to other areas of the market, I'm suggesting to you that this whole thing of leadership with the QQQ is leading all the way up. Remember, they led going to that March high, and then finally you got the Dow going to a new all-time high together with the New York Stock Exchange, because the S&P had already followed the Qs, and what was left was the IWM. IWM squeaks to a new high, and now what we've got is another rotation going on, and we're going to have to look at this in a much more selective way. And that's really what I started to do last night, and that's what I'm doing for subscribers. So we are starting to go into sectors and areas that are kind of off the radar. Some of them are going to be risky. I've got tight stops or break-even stops because some of them have already run. But I want to have in my mind the concept that rotation has worked for 7 summers. Let's call it 6 summers. And there's a chance, and I keep talking about the hubris of the president talking about the market as if he was totally responsible for the new major move up, 15, 17% in some cases. In a way, yes, but in a way, never take credit for that. No one is the market. The market is when you're flying over the Atlantic, and you look down and you say, "Jeez, that water goes down a mile deep and goes on for thousands of miles." It's the same thing. This is as I said to subscribers last night, the stock market is American economy is a super tanker. It's not this right here, or a CE. It's not Ferrari that can turn on a dime. It is a super tanker that takes a long time. We will get a lot of things, a lot of pieces of information that say, the market is ready for a major, major decline at some point. But in the shorter term, I'm wondering about that. I'm thinking a smack on the nose is coming. We've got to be careful about that. So this is a Ferrari. Look at this, only leg B in the monthly chart. This is my socioeconomic bellwether. I've got many other bellwethers. We spoke last night about CTAS, which is overalls, clothing, rentals, Cintas Core. This is also the real economy. This is the real economy, actually. And it's done fantastic. It went to leg D in the monthly. It went to a leg D in the weekly. It made a peak D in the daily. I'm saying to myself, hey, 3 Ds? Wait a minute. It could have been a fourth D. I can't remember if the 120-minute made it. This says to me, be a little careful. I think we're getting to a point now where we're going to see another rotational correction. And how it unfolds is going to be very important. Basil Chapman with 1 segment to go. Tiger Technicians out, Dow's up 2, S&P's down 5. Big discrepancy.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi everyone, Basil Chapman, Tiger Technicians Hour. So a couple of quick questions came in. PXD, wait a minute, did I just do PXD? No, PXD is down 6 at 139. This is Pioneer Natural Resources. Well, they have a problem. I don't know what that is. Let's forget about that one. And the other question was Explorer. Okay. And I'm just looking to see. Yeah, so I did the Intel to say Intel might sort of stall here, or it could hold quite well, but you've got to be a little bit careful here in that Intel wasn't participating in the big rally. Look at Applied Materials, AMAT. Applied Materials right now down 24 cents at 42.49, made a peak C under the previous peak, E low in that V-shaped pattern, made a peak F, and that says there could be a retracement in a sine wave up down range. And the big thing about Applied Materials is if it takes out 40.79 on a weekly basis, closes below it, I would suggest to you that we might be looking at time and price in the semiconductor index before maybe later on this year it starts screaming up to go to that leg D that's needed in the SMHs and in Applied Material. They all have made peak C at this particular point. I could give it an alternate count, F/C, but I don't see any reason why. The technicals at this point are very good in the monthly, not the technicals in the daily or the weekly. They're acting very poorly on the SMHs. Okay, good. So now a couple of things that I want you to do. Let's see. Yeah, I meant to do this. I meant to go to the front page of TFNN. I won't have time right now. The front page of TFNN has all that information. We're having competition every single day to give the closing price on one of the indices. And there are three awards being given. You can actually even get newsletters on one of the days. I'm sure one of my newsletter will be one of those in terms of the gifts for the winners. So, hey, check it out. I think it's really, this is a great time to do it. Summertime, they call it summer doldrums. I don't think that this is going to be an August month of summer doldrums. I think this is going to be quite an exciting month. I think I see trend changes where the tide in some areas is turning a little bit more positive, and in other areas it's not turning as positive. And so to me, that's going to be very important. Couple of things I want you to look at here. The VIX index, I don't really want to talk about the VIX index until as being a harbinger of a major move to the downside until or if the VIX starts to trade for 2 out of 3 sessions above 11.60. 11.65. It gets above 11.65 and it holds there 2 out of 3 days. I'm saying to myself, now I think fund managers have started to use August as the month of buying some kind of insurance, and then I think we could move higher, and then we'll be able to gauge by the height the potential for downside activity. So let me make it clear. Dow, still a tiny little doji candle. 3 doji candles after a spectacular move to all-time highs. Hey, that's just a steady move up, a lot of disbelief, but it also says, ooh, be careful, it's been a struggle. The MACD, if I was just looking at the MACD, I would have thought there'd be like that leg C right there. There would have been a big candle to the upside instead of the steady move. And the stochastic holding steady at 95% says good support to 21,800s. 21,857 actually is the 9-period moving average, and maybe limited upside 22,000. Maybe you can hit the 50s. I'm not sure it's even going to be able to do that. I think we're starting to see some slow rollover. I don't see anything deeper than a slow rollover based on the technicals. Now, if there's bad news, I'll spend the whole of tomorrow in session, a very special session. We'll make it the usual Tiger Technicians Hour, but it's Chapman Wave analysis in that hour.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.